My name's Ethan Braid. Today we're going to look at 9 different reasons why you should never buy an annuity. I've been a financial advisor for over 25 years. In 2011, I founded a fee-only registered investment advisory firm so that I could tell consumers like you the truth about annuities and life insurance. Throughout my career, I've met with over 300 wealthy families, and I've reviewed hundreds of annuity contracts and life insurance contracts. The information that I'm about to share with you is based upon that data set. So let's look at the first reason that you do not want to buy an annuity as an investment. The first reason is that annuities are taxed as ordinary income. That's right. Any gains that you have in an annuity contract will be taxed as ordinary income, which means that you cannot qualify for capital gains or qualified dividends. And if you've watched my other videos on taxation, you know that for many retirees, a portion of their qualified dividends may be taxed at the 0% level. So right away, annuities are a very bad deal when you think about taxes. Now let's investigate some other reasons that annuities are a bad deal for you, the consumer. The next reason is going to be no stepped up basis. If you want to leave an inheritance to your children or grandchildren, then an annuity is a no-go for you. And that is because annuities do not qualify for stepped up basis upon your demise. In this example, I'm comparing an annuity investment to after-tax investment in stocks or real estate. And we're making $1 million investment while the person is alive, and then assuming that the investment has grown in both cases to $3 million, and that is the value upon this person's death. In both cases, we have a $2 million unrealized gain, but what happens? If you have beneficiaries and they inherit an annuity, they're going to inherit your cost basis. That's right. And they will pay income taxes at ordinary rates on the $2 million gain. If you own stocks in a brokerage account or you have investment real estate, there will be no taxable gain. And that is because your beneficiaries will have their cost basis stepped up to the current market value upon your death. They can then sell that investment for no taxable gain. It's a huge deal. It's a major benefit to your beneficiaries, the stepped up basis portion of the tax code. And annuities do not qualify for stepped up basis, and therefore they're a terrible idea for any family who wants to leave money to the next generation or generations. The third reason to never buy an annuity is the fees. In this illustration, I'm showing typical fees for $1 million investment in a variable annuity. Every year, the investor is going to pay mortality expense and administration charges, and they're often around 1.5%. Then you're going to pay investment expenses for the underlying investments. Typical fee is 1%. Then you'll pay additional fees for riders, also known as optional benefits, and a standard fee is going to be around 1.25% depending on the number and types of riders you have. You may pay more than this. Your all-in hidden annual fees will be 3.75%, almost $40,000 every year on $1 million variable annuity contract. This shows you why it's very difficult to make money in a variable annuity because of the excessive fee burden that's imposed upon you, the investor. It's very hard to get ahead in the long run in an annuity contract. Your performance is typically going to be much worse than the market as a whole because of the extreme fees that you're paying. And again, I want to emphasize the fees are hidden. You will not see the fees. They're buried into the contract. It's like magic. They're just taken out and you don't get to see them. The fourth reason to never buy an annuity is the hidden commission. This is an illustration for $1 million investment in a variable annuity with the standard 7% commission. The agent or financial advisor, as they're unfortunately called, will receive a hidden commission of $70,000 for about 10 minutes of paperwork as soon as you sign the paperwork. Once the money goes into the contract, the insurance company will immediately pay all this commission right up front to the agent. And that brings us to reason number 5 of why you never want to buy an annuity. And that is the contingent deferred sales charge schedule. For an annuity that pays a 7% commission, you might be locked into the annuity for 6, 7, 8 years. This is very typical. And so when you want to get out in the first year, second year, whatever, you're going to pay 7%, 6%, 5%, so on and so forth. You're going to have a huge back-end penalty. And this is a clawback mechanism to make the insurance company whole. Think about it. The insurance company just paid a huge commission right up front to the agent. And essentially, they finance that commission. So they're banking on you paying that 3.75% fee for many years. That's how they're going to make their money. But if you pull your money out in the first couple of years, then they're going to be in a loss position. And to make up the deficit, that's why the insurance company imposes this back-end charge on you, this penalty called CDSC, Contingent Deferred Sales Charge. Reason number 6 for why you never want to buy an annuity is the conflict of interest that's present for the agent or financial advisor selling you the annuity. It is not a level playing field. What we're looking at is $1 million investment for different types of annuities or share classes, and you can see that the commission schedule is not the same. So how can you know that you're getting the best product for your situation? If you look at this table, you can see that an S&P 500 index-linked annuity may pay a 10% commission. That's $100,000 on $1 million investment. But a fixed annuity might only pay 3%, $30,000. So what annuity is the agent going to show to you? Which share class? Which type of annuity? In my experience, agents gravitate towards selling you the annuity or share class with the highest commission for them and probably the lowest return opportunity for you, the consumer, in the long run. Reason number 7 why you never want to buy an annuity is limited ongoing advice. Because the financial advisor gets paid all the commission up front, there is no incentive or a very limited incentive for them to provide any support on an ongoing basis. It's been my experience in 25 years in seeing hundreds of annuity contracts for hundreds of wealthy families that most agents just sell and run. They sell the annuity and then they might not look at it for years. You never hear from the agent, they're not looking at it and they have no incentive to because you paid them everything up front. Now you might not have known that you paid them everything up front, but that's how it works. They get an ongoing trailer commission for the annuity, but it's nothing compared to what they get when they sell the annuity to you initially. So agents don't like to work for free, right? They get all the money up front. What incentive is there for them to review the annuity contracts, say on a quarterly basis, and make recommendations to you on what investments should be changed or reviewed or anything like that? They have no incentive to do it. And that is why most consumers who buy annuities rarely, if ever, hear from the agent that sold them annuity because the agent got paid up front and they have no incentive to come back and provide you advice. Reason number 8 of why you should never buy an annuity: misleading riders, aka optional benefits. My favorite is the lifetime income rider that you see on variable annuity contracts. This is a misnomer. I don't know how it's legal even. I think because the insurance industry has such great lobbying power that it's allowed to go on. It's total nonsense. A lifetime income rider on a variable annuity contract is so misleading. I can't tell you the number of times that I've met with families who own annuities and they're so excited about this annuity. Oh, I've got lifetime income. You don't have lifetime income. What you have is an annual expense, a rider charge every year that will insure against full loss in the contract in the timely payment of the ongoing payment stream that you've been taking out of the annuity contract. So think about this. Here's what happens. You buy an annuity contract, you put $1 million in it, and they tell you, we're going to give you 5% for life, $50,000 a year. But what they don't tell you is that they're just metering your money back to you. They force you to be in an asset allocation strategy, and the annuity and insurance company understands that statistically, from an actuarial perspective, you're going to die before you run out of money. So they're never going to have to pay you any lifetime income. All they're doing is allowing you to take your money and your principal and any gains in the contract out and spend it at a metered pace. And if in the event the contract runs out of money towards the end of your life, they will maintain the timely payment of that money, but they know you're probably going to die before it runs out of money, right? So you're paying for insurance that you don't need, and you're paying a very, very high price. As I outlined before, maybe it's 3.75, could be 4 or higher, right? Probably at least a minimum of 3. You're paying an astronomical price for a benefit you probably will never use, and all it does is decrease the estate for your heirs. That's what it does, and it's less money for you throughout the course of your retirement. Don't fall victim to these misleading riders. The 9th reason to never buy an annuity: limited investment options. If you've worked your whole life to build up a sum of money for your retirement, why would you want to pigeonhole yourself into a very narrow menu of investments inside an annuity contract? It just doesn't make any sense. Why wouldn't you want to have the freedom and the flexibility to invest your hard-earned dollars wherever you see an opportunity? For instance, ETFs, individual stocks, CDs, T-bills, municipal bonds, real estate, mutual funds, whatever, wherever you want to put your money. Why would you lock yourself in to a very short list of investments inside an annuity contract? It just doesn't make sense, and it's definitely a detriment in my opinion. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.